Solana and Shopify teaming up, making strides in the crypto payments sector. Ethereum had its first deflationary year. Why does that matter? And Binance is in the news again, this time with Mastercard ending their card programs together. We discuss all this and more in today's weekly shift recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes for you. We'll start with the market update with our resident analyst, Matt, before we go on into the Solana payments update. So, Matt, what does the markets look like?
Another down week for crypto, with BTC down about 1% the last 7 days and ETH down about 2%. And it's been a similar story of late, with altcoins sort of going down even further than that for the most part for the past 7 days. From the macro side of things, there was a lot of anticipation last week for the Jackson Hole sort of symposium where the Federal Reserve Chairman, Jay Powell, did his speech on state of monetary policy in the US, and there were no real surprises there. Is basically the lowdown. So they're still expecting that they can raise rates, maybe one or two more times if they need. That's what sort of the language has been for a while now, and they're continuing to say that. So yeah, that's basically the state of the markets there. And of course, probably the focus for the past week or two has been China, and so I would expect that to continue regarding the fiscal policy, maybe some stimulus that being the second largest economy in the world may help sort of create more liquidity and even start to push up the N2 supply, of course, which is historically been very correlated with the price of Bitcoin. So watching that, but until then, we'll check in next week to see if crypto can go up a bit greener this time, Leon.
I'm sure everyone in the audience would love Bitcoin and crypto to go up a bit greener, even myself included. But Matt, thank you very much for that update. As always, we will keep you updated every week on what's happening in the crypto market. There's less volatility this time, which is quite nice this week. Let's go on to our first topic. So now, Nick, I know there has been some really major news concerning Solana and Shopify. They struck a major partnership. I wonder what this new partnership is. Can you fill us in on the details, Nick?
Yeah, so Solana has Solana Pay, which is a major integration that allows Web3 apps and allows you to pay with crypto much easier. It's kind of like your Apple Pay or your Google Pay, which is very famous in the Web2 world, and Solana is sort of a similar thing but for Web3. So with Shopify, they've allowed Solana Pay to be able to have a plug-in option for your Shopify store. So it essentially allows you to pay with crypto much easier than you were before. This is just such a big deal because Shopify is such a big e-commerce giant. They're one of the biggest e-commerce companies in the world, and it's another step of these big companies becoming more, I guess, crypto focused and more willing to embrace some of these crypto tools. With USDC, the first stablecoin and first cryptocurrency, which will be allowed in this Solana Pay plugin on Shopify.
And so, Nick, what does this actually mean for everyone on Shopify? That means they can actually receive payments in USDC. Is this live now? Do you know?
I think this is being sort of coming
Worked
out
on
in the
at the
next
moment.
few weeks, with USDC the first cryptocurrency that will be supported on it. Because as we know, like stablecoins are such a important tool in the ecosystem. So it really makes sense that USDC is going to be prioritized first, because I think we found that I don't think people are wanting to pay, for example, with Solana here. People want to pay in stablecoins to reduce that, confusion of, exchange rates and all that jazz. But the main overarching theme here is that it's kind of a real crypto's first use case in terms of potentially using stablecoins to counteract some of these high merchant fees that are currently going on. And I think we all kind of just accept that we're going to be charged 1 to 3% on Visa or Mastercard transactions. But this step is really interesting because it's potentially crypto trying to take a cut at Visa and Mastercard. And if you do the math, you can see that on Solana Pay, when USDC is settled there, it's settled for a fraction of a cent. So you're sort of counteracting these 1.5% merchant fees that could go all the way up to 3%. So this is something that I've noticed about. I actually did a written report about stablecoins. So really excited, as this is a real big step forward for that example here. So really keen to see if how many people adopt this Shopify plugin, and if it results in higher network usage for Solana, for example.
Yeah, that's right. And for anyone that might be interested over there, we do have our ratings and our foundational research on Solana on the Collective Shift platform. So if you're interested, go ahead and have a look. Of course, Solana is a lot bigger than just a payments network. They do have a whole DeFi and gaming sector. So we'll keep you updated on that anyway. So Nick, thank you very much for covering that for us. Now let's move on to Matt. Matt, our head of research at Collective Shift. Now, Ethereum had its first deflationary year. Now, this is an incredible milestone. Now, Matt, can you fill this in? What does this actually mean? And then maybe a breakdown of what inflation and deflation is. So take it away, Matt.
Yeah, so last week, I think August 23rd was sort of the first time in Ethereum's 7-8 year history where the supply of ETH, the total supply, so around 120.2 million at the time, it actually fell when you go back and compare it to a year ago. This was a very, very significant moment in, I suppose, Ethereum's history. Why does this matter? Well, we call this, sort of deflation, if you will, where the supply of a given cryptocurrency like ETH actually goes down year over year. Just like with anything in the world, really, when you're talking about an economy and there's any goods or services out there, if you sort of, hold demand constant and you sort of reduce the supply of something, the price will tend to go up, assuming everything else is constant. So that's why a lot of like ETH investors are really, focused on sort of the supply dynamics of ETH. As one of the factors in their decision making. We talk a lot about Bitcoin, how there's 21 million sort of as a fixed total supply, where we're currently at about 19.5 million, so slowly getting towards that fixed number of 21 million, whereas ETH is more flexible, where if there's a lot more people using it at once, to be very simple, if there's tons of people using it at once, then the supply is more likely to go down. That's at least the case today. There will be an equilibrium in many, many years to come, with some predictions out there where ETH could fall, towards 80, 70, 60 million. No one really knows for sure. But to see that first sort of deflationary period, come in, or deflationary year, it was, a bit of a milestone in an otherwise sort of quiet period.
Thanks for covering that, Matt. It's really a testament to the innovations that we're having in Ethereum at the moment. So on the screen here, I have the Ultrasound Money website, which in the last 7 days, we can see the actual issuance of Ethereum, which is how much Ethereum is actually being, newly going into the circulating supply. And that issuance is 793,000 per year. But at the end of it, when people use the Ethereum network and you go and buy your NFTs or do your DEX transaction or whatever you're doing on Ethereum mainnet, you end up paying gas fees, right? And so all of those fees add up to 809,000, which of course means that there is more being used and burnt than there is actually being issued into the network, just to keep it very simple for you guys out there. But of course, this is only a 7-day window. Matt has actually been discussing a whole year window. And then, of course, that brings to mind what happens when it's over 3 or 4 years. You have an asset that is continuously deflationary, which is, quite unprecedented in today's, normal economy. So, Matt, I want to thank you very much for bringing that up. Now, for anyone else who is interested, we do cover a lot of this kind of education on the Collective Shift platform about tokenomics. Look, it's a free resource. You can go and search up the Tokenomics series part 1 and part 2, where we describe a bit more in further detail about the tokenomics of different tokens and generally the issuance and supply rate and utility and so forth. So I'll leave it there, ladies and gentlemen. Feel free to go ahead and check that out. So, Nick, I'm going to pivot to you now, my friend. Let's talk about the new big news with Binance. So Binance has been in the news recently. They are having a few dark clouds over their heads. What's the new news with Binance and Mastercard?
So the latest news coming out is Mastercard has ended offering its Binance branded cards that were very prevalent in Latin America and some parts of the Middle East. So this let customers effectively use their crypto to purchase goods and services, and they used Binance as that sort of intermediary and crypto native exchange to facilitate all this. So they just come out in the last couple of weeks and issued a statement that they will be ending that partnership with Binance. So it's a sort of another tick on the long list of concerns that Binance have experienced in the last few months, with a lot of people with a lot of banks and countries really ramping up their investigations and sort of ending their partnerships with the exchange.
Hmm. That's quite unfortunate, because I do know two people who did used to use the Binance cards. I don't know if this particularly affects them, but at the same time, it is a loss of a product in the ecosystem, and that we will mourn the loss of this product. But Nick, I wanted to probe a little bit further into this, because Binance, as I said, has been in the news recently. I know you did cover a whole bunch of an article. You wrote an article here called Binance Red Flags Grow Stronger, and this is only about 2 days old. So can you give us a primer on this? I have on the screen here. What did you look at when you made this article?
Yeah, so with this article, I just wanted to group together a lot of these accusations, allegations, and concerns that have been levied against Binance, and sort of just look at whether that's part of a wider trend and whether people should be worried on it. Because as we saw with the FTX collapse, we saw with the Luna downfall, that the crypto markets move extremely fast. And so it's just important to really get ahead of things if potentially this is part of a growing trend, that shows that Binance potentially is struggling. And it was just really striking when you look at and group together a lot of these accusations and bits of evidence, that you're seeing that there's multiple countries, investigating Binance. There's in recent months as well, just in August, we've seen them have issues with some of the European payment processors. We're seeing payment processors such as Checkout.com drop Binance, which is one of its largest countries, citing sort of money laundering and compliance concerns with current investigations that are going on with US authorities. And now Binance is another banking partner or banking product that is, we can add to the list. So if we look at the whole group of evidence there, it's actually quite alarming when we're seeing countries investigating Binance. We're seeing the termination of their banking partners. We're seeing rejections of licenses. And then this is all overarching the main CFTC and CS and SEC investigations against Binance, as well as potential criminal charges with the DOJ, the Department of Justice in the US. So I think this is what the whole issue is surrounding, is whether we see criminal charges against Binance and CZ and the potential effects that could have on the market.
Yeah, that's a really quite disturbing, isn't it? When you actually take a step back and look at the entire story and you see what else is happening around the world for Binance, it doesn't bode well for them, does it? And
And
for the
and just to add in there as well, an important disclaimer here is to say as well that it's not alleging that Binance is fraudulent at this current stage, because as we just don't know whether who is telling the truth in this case, and what evidence is out there being held by these US authorities or potentially European countries that are rejecting Binance for reasons that they have not publicly disclosed or perhaps aren't being revealed just yet. And it's important to consider whether Binance potentially could be fine in all of this, and whether this is just maybe, as he would say, FUD. But we just don't know enough to levy those actual accusations. And I think this is part of the piece, is that you look together at the evidence and you look together at the current story that is being happened in the market, and everyone can make their own decisions about whether they want to use Binance or also feel that there's some sort of concerns or smoke or fire behind the smoke.
Yeah, that's right. And that's what we kind of do here at Collective Shift. We are a very unbiased organization where we give you really insightful crypto analysis. And I'll just give a tidbit to our members out there. And even if you're not a member, we recently did change our crypto rating for the BNB token, which is the native token of the Binance ecosystem. And we have actually changed that into a bearish rating at the moment. So I'll just share that with a few of the listeners out there. Thank you very much, Nick, for covering that. We will keep the members updated on this Binance FUD, as we do call it. But let's move on to our next big topic of the week. So, Matt, I know there has been some privacy concerns in crypto. Tornado Cash is in the news again. This time, a few of the other founders actually got charged. So what's this recent news article about, mate?
Yeah, so two of the founders of Tornado Cash, which is the software really to simplify, it's just an app or a protocol, that's built on the Ethereum blockchain, just like thousands of other apps. People use it for it's what's called a mixer. So it's sort of like a service where I can sort of really simplify it, put my ETH in there or another cryptocurrency, and out the other end spits out some other cryptocurrency, like the same, ETH. I put in ETH, I get back ETH, but you don't really know. It sort of mixes it around, which is why it's called a mixer. And it's, what's the value of it? It's really to help, preserve privacy, really, for people who, don't want a trail of their ownership to be traced back to them. Of course, just like anything to do with privacy, it can be used by good and bad actors. And we've seen prosecutors and law enforcement really target Tornado Cash in recent years. And late last week there was a new development with respect to accusations of sanctions and violations of money laundering through Tornado Cash, including hundreds of millions of dollars for which was with respect to the Lazarus Group, which is a hacking group that is sanctioned by the US and is seen to be affiliated with North North Korea. So yeah, that's essentially the latest development. It's another sort of unfortunate story for Tornado Cash and the team associated with it, and we're starting to see this battle for ultimately it might come back to what is free speech when you really strip it back with respect to Ethereum being sort of a public service, if you will, or something that's permissionless, accessible to anyone around the world. What can and cannot be deployed as an app, who has a say over what is good and what is bad. So that's sort of the high level implications of this. But we can talk about other ramifications it may have on the crypto industry at large. But Nick, I know you've got something to add in here as well.
Yeah, because it's a major thing in terms of privacy, but I think the probably the core issue here that I'm feeling like we're going to perhaps experience more in the coming years is this idea of who or what is regulated and how to, I guess, in this case, the US Treasury enforce sanctions on public, I guess, source and public protocols that are published there out there, on the internet or in this next version of the internet. So it's massive implications of whether we're going to see similar issues or similar protocols also be targeted with sanctions violations, which is really interesting to me. And that could be another, I guess, fork in the road of maybe another challenge for cryptocurrency and a lot of these public protocols. But with Tornado Cash, we also have to consider that even though it's a positive, I feel like they're maybe in, I guess, bad waters because they did have a token, and I guess you could probably make the argument that they were potentially getting some sort of financial incentive and financial reward by operating this Tornado Cash platform and protocol, which sort of adds another hair into whether this is good or bad, even though I just think it's something important to consider when we're looking at this these sanctions and these new charges that are coming out.
Yeah, the entire space is actually quite complex, which is why we have to really keep on track of this because, yes, they just made a code and all of a sudden they're in prison. So it's a very, very complex space, and there's just isn't enough regulation to actually feel safe in the entire crypto space when it comes to privacy preserving protocols. So I do wish the guys at Tornado Cash luck out there. So let's move on to the next topic we have today, which is what we think listeners should really be looking forward to. Now, Matt or Nick, I know FTX has been in the news recently. There's some news with Galaxy Digital, which is Mike Novogratz, that's planning to work together to actually sell or stake or hedge a little bit of the crypto portfolio that FTX have. Now, I wonder, do you guys have the scoop on this? What are they actually planning for this?
So come out in the news this week that, as you mentioned, Novogratz and Galaxy Digital are going to be the team that kind of work with the FTX liquidators, who said that they want to, I guess, transition or give back some of these funds to creditors, but in the form of fiat currency, not cryptocurrency. So this involves potentially them selling vast amounts of cryptocurrency. Now they have about a 3 billion crypto portfolio at this stage. Who knows, there could be more cryptocurrency they find out there that increases that total. But this is just all looking at potential sell pressure in the market. Although a lot of this does seem to be large bits of Bitcoin, which potentially is like their GBTC product, which they reportedly have quite a lot of exposure to. And a lot of that is actually Solana. So it's reported that they have about 13% of the Solana supply. So this may result in a lot of people being worried about whether we're going to see a lot of sell pressure for Solana in the coming years. But one thing is to consider that this has sort of a schedule associated to it. They just can't unlock it all at once. And these unlocks go all the way up to about 2028. So although they do have a lot of the Solana supply, that it is going to take a while for them to offload it all, and it's going to be offloaded in gentle amounts, not 10% hit the market all at once, which some people may think if they see some headlines, they may worry and panic. But in that case, it may be a touch unwarranted. Although maybe some smaller cryptocurrencies that we find out in the filing may have that sell pressure associated with it.
Definitely, FTX may be holding some tokens that aren't, scheduled to be locked for a foreseeable future, and so may just have the ability to go ahead and sell that on the market, which doesn't bode well for that specific crypto. But for Solana, so far, it seems like 2028 is the date that we're looking forward to. But anyway, lots of things could happen in this space, so we'll keep you updated if anything. And speaking of the FTX situation as well, there is a small public service announcement for any listeners out there. So FTX is in liquidation, and the company responsible for the liquidation is called Kroll, Kroll. Now, Kroll did actually have a security breach really recently. This is about 4 days old, where hackers actually managed to take usernames, IDs, claims, and of course the emails as well. So please watch out for convincing personalized emails that are targeting you, asking you to withdraw your funds from FTX. As always, go to the official website. Always be very cautious. Bookmark things if you can. Go to the official Twitter as well. So just be cautious out there, because this space is full of scammers, unfortunately. And we're here to help you navigate that space. Check out our security center over at Collective Shift. Now let's move on. Thanks, Nick and Matt, for covering that story for us. Let's move on to our rapid fire over or underappreciated in the market. So Matt, take it away. What did you appreciate in the market this week?
Yeah, I think one thing that took me by surprise was Uniswap, the popular sort of decentralized exchange. Research from Bitwise sort of found that it's actually it's done more volume than Coinbase has done on its spot volume. So just regular trading of Bitcoin and ETH and all the other tokens. So nothing to do with derivatives, which, when you talked to me about 3 years ago and you said this would happen in 2023, I would have been extremely, surprised to see Uniswap has already started to, outpace the likes of Coinbase on a sort of quarterly basis. So 2 consecutive quarters. We saw sort of Uniswap do about 155 billion worth of volume in Q1, and Coinbase did about 145, so it just pipped it. And then that margin sort of grew again in Q2, with Uniswap doing about $20 billion worth of trades, more than Coinbase's sort of spot markets. So yeah, quite a big trend that's happened in 2023 so far. You might ask, does this mean it's good for the Uni token? As we've talked about many times at Collective Shift, tokens and usage of a protocol aren't always correlated. We've actually seen that Uni token, continue to fall with all the other altcoins this year. So far, it's down about 10% for the year, and it's still down about 90% from all-time highs, even though it has continued to really, go on to strength, in the past year or so, with a number of products in the pipeline as well coming out soon. So yeah, really is something interesting that I saw not many people speak about last week.
Yeah, Matt, that's amazing. Thank you very much for actually highlighting that. And just want to reiterate that just because the protocol is doing very well and it's making strides doesn't mean value actually accrues to that protocol's token. So that is something that we also do cover in the tokenomics series. But don't worry, guys, I won't mention the word tokenomics anymore in the podcast. Now, Nick, what do you have, my friend? What's something that you appreciated in the market last week?
Maybe looking at maybe the rumor mill to get something spicy going on. I saw some talk about one of the Middle Eastern countries, Oman, looking at sort of investing about 350 million in a cryptocurrency Bitcoin mining center and facility. So this was just according to a local report. So take this with a grain of salt when we're looking at whether this actually turns out to be true. But it's got this idea for me that whether Bitcoin is going to face any more challenges, or if this is going to be the next sort of adoption phase of Bitcoin when we have nation states really start to be aggressively looking at Bitcoin or diving their toes into Bitcoin mining. We saw Russia actually looked into, and there was reports that they were sort of sponsoring and subsidizing state-based or state company mining facilities back earlier in the year. We saw a similar thing with Bhutan, which is a southeastern country, which was looking at sort of investing a part, sort of 500 million into some Bitcoin facilities. And it's also unclear exactly which other countries are secretly or under the radar getting involved in Bitcoin that aren't publicly announced. So maybe in the rumor mill here, I'm appreciating whether we're going to see a rise of sort of nation states really getting involved in Bitcoin mining, and exactly where that's going to be a new narrative that comes up in the coming years.
Yeah, that's right. Some nation states don't want to be just publicly sharing what their strategy or crypto strategy is, right? Because you don't want to be sharing it to the rest of the world out there. You want to have the first head start. I think Venezuela is doing a pretty good job of having that head start, though. So, Nick, thank you very much for covering the rumor mill. As always, I love rumors. I love it when we find out if something is happening in the down low. So thank you, Nick. I want to share my one today, which is something that's been in the news a little bit. So this is about CBDCs, central bank digital currencies. So with people being hesitant about its implementation, it's got some privacy issues and just how invasive it could be. Well, I've got some news just locally for us Aussies over here. So I think it's overlooked, really. The Australian Central Bank, or the RBA, the Reserve Bank of Australia, actually came out with a report and said it'll take a couple of years and years for any kind of implementation of a central bank digital currency. This actually came out from a 1-year pilot program when they said there's too many questions that have gone unanswered from our pilot program. So we're just going to put it on hold for a while. So they seem to be playing it safe over in Australia, a bit conservative with the CBDC, which I think is underappreciated because a few people are quite scared of central bank digital currencies. They do change the entire paradigm of how the financial system in your country kind of evolves around you, you know? So just some local news for us Australians here. I'll let it go there. And I think we'll call it a day for today, ladies and gentlemen. That's a wrap for this week. If you're looking for more insights, make sure you check out our revamped Weekly Shift newsletter, providing free weekly insights every Friday. So make sure you subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter.